$1.03. That is the exact live price of Tilray Brands Inc. right now, trading up 4.76% on the intraday session. While the broader market might be obsessing over the latest tech rallies, something fascinating is happening in the underbelly of the Nasdaq, with ticker symbol TLRY. You might see a 4% gain and think it is just another random fluctuation in a penny stock, or perhaps a dead cat bounce for a company that has been beaten down relentlessly over the last 3 years. But if you look closer at the order flow, the volume spikes hitting the tape this morning, and the specific way this equity is interacting with the $1 psychological support level, you start to realize this isn't just noise. This is a battleground. The expectation for Tilray Brands has long been that it is simply a call option on American federal legalization, a lottery ticket that retail traders buy on Robinhood stock trading accounts, hoping for a sudden legislative miracle from Washington. The prevailing narrative suggests that without the DEA rescheduling cannabis to Schedule III, this stock is dead money, destined to bleed out as cash burn eats away at the balance sheet. That is the expectation. The reality, however, is significantly more complex and arguably more bullish than the headline skimmers realize. The reality is that Tilray has quietly transformed itself from a pure-play Canadian cannabis operator into a diversified consumer packaged goods powerhouse that is arguably less dependent on the White House than any other name in the sector. While everyone is waiting for the U.S. government to make a move, Tilray has been aggressively capturing market share in Germany, following the massive legislative shifts in Europe, effectively building a revenue fortress that the market is currently pricing at near bankruptcy levels. Today's move to $1.03 isn't just a tick up, it is a defense of the company's listing compliance and a signal that the shorts, who have piled into this name with reckless abandon, might be running out of ammunition. When you analyze the intraday action today, you see a distinct shift in character compared to the selling pressure we saw earlier in the week. Usually, when a stock like Tilray pops 5% in the morning, you see immediate selling from bag holders looking to get out at break-even. But today, the bid support is holding. We are seeing sustained buying pressure on platforms like Interactive Brokers trading systems, which often indicates smarter, perhaps algorithmic money entering the fray rather than just pure retail speculation. This suggests that the smart money might be front-running a catalyst that the general public has overlooked. We have to talk about the elephant in the room, which is the sheer scale of the retail ownership here. If you look at the discussion boards for Fidelity Investments or the chat rooms on SoFi Active Investing, the sentiment has shifted from despair to a cautious, almost angry optimism. Investors are tired of the delays, but they are holding. This creates a fascinating supply shock scenario. If the float is locked up by stubborn retail investors who refuse to sell at these lows, and if the company continues to execute on its international expansion, the available supply of shares for short sellers to cover becomes dangerously thin. This is the classic setup for a squeeze, not necessarily driven by hype, but simply supply and demand mechanics colliding with a valuation that makes no sense relative to the company's revenue run rate. Let's strip away the noise and look at the actual business, because this is where the divergence between perception and reality is widest. Most people still think of Tilray as that Canadian pot stock. If you are managing your own Schwab Intelligent portfolios or looking for investment help online, you will often see it categorized strictly under cannabis. But that classification is outdated. Tilray is now the 5th largest craft beer brewer in the United States. Let that sink in. Through acquisitions of brands like Sweetwater, Montauk, and others, they have built an alcohol division that provides steady, reliable cash flow, something the cannabis side of the business has historically struggled to do. This wasn't just an embark on a new strategy. It was a survival tactic that is now paying dividends. While other cannabis companies are diluting shareholders to keep the lights on, Tilray is selling millions of dollars of beer and bourbon. This beverage revenue acts as a hedge. If cannabis legalization in the U.S. takes another 5 years, Tilray can survive as a beverage company. If legalization happens tomorrow, they have an existing distribution network for THC-infused beverages that no other competitor can match. They are essentially a Trojan horse in the alcohol industry, waiting to flip the switch on cannabis beverages the moment the regulatory ink is dry. We also need to discuss the German situation, because this is the primary driver of the reality that exceeds the market's expectation. While U.S. investors are hyper-focused on the DEA and the intricacies of Schedule III, Germany has effectively opened the floodgates for medical cannabis. Tilray is one of the very few companies with in-country cultivation facilities in Germany. The Neumünster facility is a strategic asset that cannot be replicated overnight. With the removal of the narcotic classification in Germany, the friction for doctors to prescribe cannabis has collapsed. This means the total addressable market in Europe's largest economy has expanded exponentially, and Tilray is sitting right at the source. This isn't a future story anymore. This is happening in the current quarters. The revenue recognition from this shift is starting to hit the financial statements, yet the stock price at $1.03 is trading as if the company is still entirely dependent on the saturated Canadian market. This disconnect is where the opportunity lies for those willing to do the work and look beyond the headlines. I want you to pause for a second and think about your own exposure to this sector. Comment below how many shares of Tilray you currently hold, or if you are waiting for a specific price target to enter. Are you averaging down at these levels, or have you walked away from the sector entirely? The psychological fatigue in this stock is palpable, and hearing where you stand helps us all gauge the true sentiment better than any analyst rating. Now, let's look at the financials and the balance sheet, because this is usually where the bear case finds its footing. Critics will point to the debt. It is true, Tilray carries a significant debt load, a legacy of the aggressive merger with Aphria and subsequent acquisitions. However, the company has been proactively managing this. They have reduced their net convertible debt significantly over the last year. They are not sitting on their hands. By paying down debt and restructuring their obligations, they are reducing interest expenses and extending their runway. When you use Fidelity Wealth Management tools or Interactive Brokers account analysis features to look at their debt-to-equity ratios, it still looks high compared to a blue-chip consumer staple. But compared to its cannabis peers, many of whom are on the verge of insolvency, Tilray looks like a fortress. They have cash on hand. They have liquid assets. They have a path to being free cash flow positive. The market is pricing them for bankruptcy, but the financial statements suggest a company that is simply in a heavy investment phase during a cyclical bottom. Furthermore, we have to consider the technicals of the stock chart itself. We are sitting at a historic support level. The $1 mark is more than just a psychological barrier. It is a compliance threshold for the Nasdaq. When a stock dips below $1 for too long, it risks delisting, which forces institutional selling. Tilray management knows this. They will fight tooth and nail to keep the price above this level. This creates a floor of sorts, where corporate action, whether it be buybacks, press releases, or strategic announcements, becomes highly probable whenever the stock flirts with this danger zone. Today's bounce to $1.03 is likely a reflection of that defense mechanism. Traders know that the company cannot afford to lose the Nasdaq listing, so they front-run the defense. It's a dangerous game, sure, but it provides a predictable volatility that nimble traders love. Compare this to Nvidia stock or Tesla stock, where the moves are driven by global macro flows and earnings whispers. Here, the moves are existential. That creates a different kind of urgency in the price action. Let's shift gears to the macro environment in the United States, because we cannot ignore it. The political landscape has been a minefield. The expectation was that the Biden administration would rush through rescheduling before the election. That didn't happen on the timeline the bulls wanted. Now we are in a period of regulatory purgatory. But here's the contrarian take. The delays might actually favor the biggest players like Tilray. Every day that legalization is delayed, another small, undercapitalized competitor goes out of business. The illegal market is tough, but the legal but highly taxed and regulated market is a meat grinder. Only the companies with scale, diversification, like the beer business, and access to capital markets can survive this winter. Tilray is consolidating the industry by attrition. When the regulatory gates finally open, there will be fewer competitors standing to fight for market share. It is a brutal reality, but a potentially profitable one for the survivor. This is why you see increased activity on Robinhood investments and SoFi robo-advisor accounts accumulating shares in these survivor stocks. The bet isn't just on weed. The bet is on Tilray being the last giant standing. We should also touch on the branding aspect. Tilray's acquisition of brands like Breckenridge Distillery and Shock Top wasn't just about revenue.